myself in terms of service delivery and the kind of products on board. I want to take this opportunity to introduce to you our board chairman, Mr. Peterson Mwangi, to come and then tell us a little bit further in terms of our deeper expectation at Century Microfinance Bank. Welcome, Peterson.
Thank you so much, Florence. Indeed, I would want to say it's really a privilege to be here. We thank God for this day, and to Matthew Brandley, the CEO, Branch International, Branch International co-founder, Neil. Thank you very much. Branch Kenya, East Africa, MD Rose. Thank you very much. And Florence, CEO of Century Microfinance. Ladies and gentlemen, good morning. Hope you can feel our joy, you can feel our jubilation. You know, as a Century, we are very excited. And this moment, as people say, it's a bittersweet moment for us. Century is 10 years old this year. And when we got a partner, this moment is like when you give out your daughter for marriage. On behalf of the board, of the shareholders, and of the staff of Century Microfinance, we have had to go through this and say, yes, we have to give away our daughter, and it is a moment for celebration for us, but at the same time, apprehensive of the fact that our daughter has found another home. And we believe, because we vetted the group, we believe that the group, Rose is very amused. Yes, the group ticked the boxes because we believe that this is an extremely synergistic partnership. As Rose said, they were looking for a particular partner, and for us also at the same time, we were looking at a particular partner as well who complemented our strengths, and that partner we found in Branch. We knew that the world is going digital, and therefore what we needed was somebody who will complement our digital journey, and Branch has filled that. Oh, I'm sorry. Has filled that position very well. And we are very grateful that they have actually agreed to partner with us. We are there. We are now actualizing what we had promised. What I would say is that when we agreed to go with Branch, we wanted somebody who is going to help us reap into the digital arena, and that was their main strength. Our main strength was traditional banking. When we combine the two, all we are expecting is that our journey going forward is going to not take miniature steps, but big strides. We are going to be disruptors in the industry. We are going to introduce new products. It is going to help us realize the big visions that we have always had, but which we could not achieve without a major technology partner. And therefore, what we would assure you is that going forward, please look out for great products from from us. You look out for convenient banking, like Florence has promised, and we are looking forward to even welcoming you to our bank if you have not been there already. We know that with the big number of customers that branch has been handling, we are able to onboard them to our banking services, and they will enjoy services they couldn't previously enjoy at branch, including savings products at very premium rates. We believe that we'll be able to give them rates that they cannot get anywhere else in the market, and we'll be happy to share our progress and our success with them. So, as our customers, all we can tell you is welcome to the new Century and Branch Microfinance Bank. We are going to decide which name we'll use, but we are going to have a name that is going to resonate with all of us, and that is going to actually provide all of us with the promise of the future. For our small business customers, all we can do is promise you that it's not going to be business as usual. We are going to introduce new products that are going to uplift your business, that especially at this time when many people have gone to self-employment because of unemployment in the main sectors, where white-collar jobs are no longer guaranteed. We will work with you, we will hold you, we will grow your business as you help us grow ours. And it's going to be a new dawn for MSMEs. We are going to make it worthwhile being our partner. And for all of you, I would welcome you once again to make sure that you're not left behind. If you have not opened an account with Century or Branch, please make sure you do that before you leave this place and you start enjoying a new dawn in banking services. Asanteni sana. And with that, I want to take this opportunity to invite Branch International co-founder and CEO, Matthew Franley. Welcome, Matthew, and address our guests. Thank you.
Thanks a lot, Peterson and Florence. I think the marriage metaphor is a good one, and I confess I forgot to ask for your daughter's hand in marriage. So I should. This can be the reception, the celebration of two great families coming together. On behalf of Branch International Board of Directors and Management, it's my delight to join you for this brief ceremony as we formally mark the beginning of the journey that we will see Century Microfinance Bank join the Branch International family. Thank you. Today is a special occasion, one that heralds a new dawn and a revolution in the financial sector world over. For the first time ever, we have a fintech acquiring a bank. It has always been the other way around with banks buying fintechs, but this is a great occasion in Kenya, the very first time a tech company has merged with a bank to improve our services to the mobile generation right here in Kenya. We believe that establishing a true Pan-African digital bank is long overdue and will be a game changer in our efforts to deepen financial inclusivity while reaching underserved markets. A little bit of the history of me. I've been working in Kenya basically my whole career, and it's been a complete blessing, and I'm so thankful for all the great friends and family that I've made in Kenya and all the wonderful people that I've met over the years, and I love serving the customer, and that's the reason we have merged with Century Bank so that we can better serve our customers and offer world-class savings products, world-class payments products to our user base in addition to loans, which we've been doing since 2015. So just some context, Branch has given about 20 million loans in Kenya over the years, and every day we disperse about 20,000 nano loans. to people all over the world. But we haven't had the chance to become a bank. And so this is a very new era for us, and we hope to learn, we are sure we'll learn a lot from the Century team, which brings a lot of amazing expertise. They know the customer base in a way that we cannot. We know them digitally. I do customer service, but they do customer service in person. And they walk the streets, they visit small business men and women here in Kenya, and have a very loyal and passionate user base. And we want to continue to serve that user base, just do it in addition to a traditional sense, in a digital sense as well. This is a demonstration of our commitment to building a Pan-African digital bank. It is a reflection of our ambition to scale our presence and enhance our financial inclusion goal. The support provided to us by the government of Kenya and the Central Bank of Kenya has given us the impetus to use this country as the launch pad for continental expansion efforts. I really think there's a deep need in the continent for a digital-first bank that can serve people in increasingly remote areas and across borders as they get Android phones and use the internet. We want to serve them in a very modern and world-class way that we can do through the use of technology that we've been working on now for 7 years. We're confident that the Century Microfinance Bank is the right partner to realize these ambitions. It enables us to make a landmark transition as the first digital lender to expand into the microfinance banking market, allowing for deposit-taking financial services and enhanced lending for individuals and small business clients. We'll subsequently explore similar partnerships in other markets across the continent. I just want to say a little bit about the pandemic as well. The pandemic has considerably altered the operating environment in the financial sector. The rapid pace of change has squeezed years' worth of progress into months. Consequently, we have had to scale and enhance our technology infrastructure to meet the requirements from customers and regulators. We also have to increase our focus on delivering customized and seamless experiences to address digital confidence. It takes a lot of work. You've got to build trust in folks. I remember at the very beginning, people didn't believe it was real when we started offering these world-class financial services to people just on their phones. It takes decades of trust building with the Kenyan public. And I'm convinced that partnering with Century will help us increase and deepen the trust we have with the Kenyan citizens. As a group, we also remain committed to supporting transformational investment across all our markets of operation. A special focus is intentionally being channeled towards the small and medium-sized businesses that you all know how to serve so well. Now more than ever, it's become crucial for us to prioritize our efforts towards MSMEs, including women and youth-owned enterprises, which the pandemic has adversely affected. And we all know that women are the backbone of families, and women are the backbone of the financial and especially the microfinance sector here in Kenya and throughout the world. So in conclusion, I would like to acknowledge in a special way the management teams from both Branch and Century. You guys are amazing. Thank you for your willingness. This has been a long process. You've had to work really hard. Being regulated by the central bank is not easy. They do a great job and have strict requirements. And so the milestone that we've achieved today is significant. It was not easy. It was behind the scenes, but it required years and so many man hours by these management teams. So I'm thankful for you. And I'm so excited to be celebrating this marriage. Thank you.
All right, please applause for Matt Flannery, co-founder and CEO, Branch International. And yes, indeed, how business imitates life. And I think today, as Matt put it, and also Florence and Peterson, it's almost like a marriage. And what we've just experienced here is just what had been going on behind the scenes, the years and nights and days of talking, negotiating, and of course, finally, today, Matt asking for the hand. That was quite an easy one. Well done. Please, can we give it up to Branch once again? And also Century for this big stride. Because as all of them, all the speakers have mentioned, this is a first in many ways. And I like one thing that Matt has actually alluded to here, and that is the fact that this is the first time that we're seeing a fintech acquiring a bank. Normally it's the other way around, but it just goes to show you how things are changing. Innovation is actually now what will be the meal of the day if you want to really forge on and become a leader in your sector. So I think we are on to something here. And if this moment has actually come true, which it has, and being here this morning, it is indeed a clarion call to really embrace technology and merge with the old. I mean, I'm not saying Century is you're old. You're not any old in any way. 2012 is a miaka nyingi sana, but definitely it just shows the old and the new can actually merge, and something great comes out of it. So at this session, I'd like to open the floor for a Q&A, and I'll open it to, I know we've got quite a number of our friends from the Fourth Estate. I'll open this floor moment for us to ask questions. You'll introduce yourself, introduce your media house, yeah, and then we'll shoot with the question. I'd like to begin with the first question, and this goes to Matt. And Matt, I know maybe you felt you didn't have enough time to really sort of expound more on how big this venture is in terms of a fintech acquiring a bank. Maybe I could ask you how important and how cognizant is this within the sector? What just happened? Fintech getting a bank and getting together.
Great question. Also, just want to say it's a merger, not an acquisition, exactly. So we're merging our two services by the best of both worlds, both offline and online services. They can really complement each other. It's historic because it's just a very rare event. The government doesn't allow these things to happen easily. We go through a very strict vetting process, and it took years of hard work on our part and on their parts to make it happen. So we're just excited. We think we can provide the best of both worlds, and it's a movement that's happening all over the world, but it hasn't happened in Kenya. And so I think this represents a big step for both the technology sector and also the banking sector, merging the two, because we need each other to work well and to serve our customers best. We depend on each other. And so it's the bridging of two cultures and two regulatory regimes, which isn't easy. It's a hard work, but it's satisfying work and it pays off. Thank you.
All right, thank you, Matt. I think I can, do you have a mic over there? Please introduce yourself and your media house.
Thank you so much. Good morning. My name is Julian Samboko from NTV Kenya. I have two questions. First is, I just like clarification because the notice that I got from the Treasury and from the central bank suggests this is an acquisition and not a merger. If you look at the stake that is being taken up by Branch, it's an acquisition. The second one is, this transaction is taking place at a very interesting time because digital lenders are coming under the ambit of CBK. How do you intend to run this outfit? Will there be a Chinese wall between Century and the CBK's ambit and Branch now coming under CBK's ambit? And then my final question, if I may, if you look at the latest filings with the CBK, Century was in a not very good financial position, I mean, from the bottom line standpoint. What's your immediate intervention now that you're having this acquisition? Thanks.
Would you like to take the questions several, or you'd like to do one by one?
One by one.
One by one. Okay, cool. So I think you'll be next.
All right. So let me answer the question regarding regulation, because yes, there is regulation regarding the digital lenders, which actually was concluded, and there's this paperwork that had to be submitted. But we were in a very interesting position because the transaction started close to 2 years ago, and this was part of what we were looking at. Even way before COVID, we were saying, as Branch, we need to strategically say or position ourselves in a place where we can do much more than just digital lending. So everything else or what I can call the externalities just happened as we were in the middle of the transaction. So we will fall under the regulation of the microfinance bank, at least from the approval that we received. And yes, based on also the approval and what it read, yes, it's an acquisition. However, psychologically, the way we're looking at it between Century and Branch, because we want to collaborate, we have strengths that we can borrow from each other. That's why we are calling it a merger, but from what the central bank approval read, yes, it's an acquisition. With regards to what are the first steps we shall take, yes, we do have a lot of plans that we've been working on ever since the approval came in. Of course, you have to look at the financials on both sides and see how can we be able to meet the regulatory requirements. So you look at the capital requirements, you look at whether it's going to be the liquidity ratios. But of course, through the transaction, there was some, let me call them conditions precedent, which we had to look at. Which are at least known by both parties, and that's what we are trying to complete by now. But of course, naturally, we will comply with all the MFB requirements, even as both parties come together.
Okay, thank you. Rose, you'd like to go ahead?
Hi, my name is Susan Mokami. I wanted to find out, so you guys are coming into an age where the youth are really finding out about all the possibilities that can come up in terms of finance, and the COVID pandemic happened. And I just wanted to find out, so what exactly can the youth benefit from this merger or acquisition? Yeah, so merger or acquisition. So what exactly can we benefit from all this? I mean, what are some of the products that you're going to come up with? What are some of the services that you're going to give us with this acquisition?
Thank you. That's so important to us. And just to give some context, we also work in Tanzania and Nigeria and India. And we've piloted other products there that we couldn't do yet in Kenya because we weren't regulated as a bank. And so we intend to roll them out steadily over the next few weeks, actually. So you'll see some release announcements on that. But one of the things that we're really passionate about doing is encouraging savings. So we started with small loans, which is a great way to build a customer base, but we also want to encourage a culture of savings. And we think we can deliver world-class savings rates to the youth at small ticket sizes. So typically, if you want to open a bank account, there's a minimum deposit amount, there's a long application. We think we can offer an instant savings account with a high rate of return. Just to give some context, in Nigeria, we offer 20% a return that's on a fully liquid savings account. So we'll be doing something like that here, really giving to the youth what established people had in the past through physical services. Now we're giving it digitally, and we can offer that across the country instantly. I hope that answers your question. Yeah. Do you have another question?
Yes, good morning. My name is Faisal Ahmed from Citizen TV. I have a few questions. The first one is the value of the acquisition, 85% of Century Bank. Maybe if you could just put that in absolute figures, how much was it? And in the past, we've seen banks, or when banks merge, the issue of the name. I know Peterson had touched on this, but maybe what name are you going to go with? And also, when it comes to your customers, are they now going to have, if someone has an account with you, Branch, are they automatically going to have an account with Century Bank, or how is that transition going to be? And the last question, and this one you can correct me if I'm wrong, was it that the central bank did not give you direct approval to become a deposit-taking entity, and that's why you opted to now acquire or partner with Century Bank?
Right, let me answer from the most recent going back. So from the transaction, yes, when we approached the central bank with the interest of becoming a microfinance bank, we were doing two things at the same time. One, you already start scouting because sometimes you weigh, should you start from the ground up or should you already start talking to institutions that are already in the business, because they could also be looking for an investor. And as Peterson mentioned, they were looking at for an investor at the same time. So when you look at the microfinance bank sector today, it was a very good space to be in, whereby there are many that are looking for investors, and we said, hey, if Century are willing, because I think we had looked at 4, and Century were willing to move as fast as we wanted, we then decided to approach Central Bank with, we would prefer to work with an existing microfinance bank. And actually they welcomed it because they said it's a better way, rather than bringing one more microfinance bank into the space, have you already looked at the ones that exist and tried to work with them? So I think from the conversations we had with them, we sort of were in the same mind frame, and therefore that's why the transaction worked out. It may have taken a bit of time. There were many other factors. COVID came in. I would believe that from a regulator's point of view, they had many other things to look at, and therefore maybe that affected the length of the transaction. But nonetheless, they would still update us and say, hey, we're still in the progress of approving, and we'll let you know as soon as it's done. And here we are today, which we're very happy about. On the second question, which is regarding, will the Century customers have different accounts from the branch customers? Now, those are the details that we're going through today, because in any merger or acquisition or any two companies that come together, you have to go through the integration process. You have to go through how will the teams work together with the least interruption to the customers, because the customers must not be affected. So those are the conversations we're having with the different teams, whether it's technology, whether it is the core banking teams on both sides. So we can actually pride ourselves in the fact that as branch we're able to generate as many transactions as possible, because we serve millions of customers, like I mentioned, and therefore it gives us room to move quite fast, if I can put it that way. And we're saying, hey, this is what we're bringing to the table. This is the technology you can leverage on. On the other hand, as Century, we've talked about it, they know their customer intimately, and therefore, how do we plug in those two? So it's going to take a bit of time. We don't have an answer today and say, hey, Century customer, this is what's going to happen, or branch customer, this is what will happen. But we will communicate, and all our customers will see lots of communication coming their way. On the value of the acquisition, I'm scouting around the room to look at, is our lawyer present? Am I allowed to disclose this? So I believe we can be able to disclose, which I can actually do offline after this discussion, but I just need to check in with them. Probably it will still be in the public domain once the transaction is complete, because the approval is just one part of the transaction, but I'm pretty sure we can be able to share, because even Century will be publishing their financials for 2021 very soon, so people will be able to understand what the investment of value was. Yeah.
Maybe just to add on that, sometimes when you go to pay dowry, you don't pay everything at one go. So what happens is that they chill, wait and see the situation on the ground. It's all working, take the next chunk. So I think that's what you're trying to say. It's just gradual.
Yes, and the wazers never tell the other guys.
Yeah, they
how
don't
much
tell the
yes.
Yeah. But it's good to have the lawyer. Maybe we will clarify that.
Yes,
but it's a good question. I think a lot of questions, and I think it also adds to the depth of how this commitment is. But thank you for that question. You have one more? Oh yes, the name.
So regarding the name, we had also forwarded a few names to the central bank for an approval. So as soon as that comes through, we'll be able to communicate. It actually will represent both parties, so we hope we can be able to communicate that very soon as well. Yeah.
Yes, you have to make sure the right name is on the marriage certificate. That has to be there, correct, and everything. All right, next question. We're still open. I can see quite a number. This is interesting, fantastic. I think we have another mic there, right? All right, let's go with this gentleman here. Please introduce yourself and who your question is directed to and your mediums.
All right. Good morning. Kefa Muirore, Citizen Digital. Two questions, one to Matt, one to Rose. I'll start with Matt. This has been a first on a fintech acquiring a bank in Kenya. I'm curious to know, you've already disrupted the lending space. There's a lot of conversation we can have on that. But I'm curious to know now on the banking space, is this a new disruption wave by digital lenders? And would you see this becoming a theme, especially on MFB side? We know a lot of them have been affected by the pandemic. The status of their finances are not at their best. So would you see yourself or the industry at large playing a role in that disruption? My second question to Rose, we have about a 17% gap to financial inclusion, going by CBK data, at 83%, we still have 17% to go. This being a digital bank, I'm curious to know, looking at their physical footprint, there isn't much to talk of there. I think it's 1-2 branches. Would you still be combining brick and mortar, especially as we talk of getting to the unbanked, those perhaps in far-flung areas? What will be the mix of digital and brick and mortar? Thank you.
Thank you for the great question. We don't set out to disrupt anything. We just follow our customers and try to serve them better and better. So we feel like with technology, it enables us to do that in certain ways that maybe most banks cannot do. And hopefully we can set an example and they can follow and we can improve the whole sector together. I don't think it's not a winner-take-all market. There's a lot of space for sort of new innovation, and when that innovation happens, others can joyfully copy it, and we feel thankful for making our own contribution to that. I'll turn it over to Rose for the second part of the question.
So I think on one part we would say it's a great thing looking at the number of branches that Century has, because we have been serving tons of customers digitally. We know them from an AI, or let me call it artificial intelligence or machine learning point of view. We can be able to assess behavior and offer them credit. And therefore, we want to be able to look at a case where can we offer more services within the same digital context, where we're saying we're a Pan-African digital bank, and therefore the number of branches does not become the most important thing that we shall look at, but how customers will trust and do more transactions with us, the way they've been doing it with us for over 7 years, and enabling, if anyone for any reason said, hey, I really, really wish to go to a branch, we know, yes, there is a branch presence, but we want to push as much as possible, almost 99, if not 100% of the processes that we do to be on a digital perspective, at least for the mobile generation. So that's something that we will really be pursuing well with this transaction.
Thank you. My name is David Leje from Kusoko. One question has been asked by my brother Kefa about brick and mortar and emerging in the digital space. And in terms of the same question, the issue, will branch that outfit also help in terms of also ensuring access to devices, because we cannot just speak about providing digital solutions when we also know there's a challenge in terms of devices within the country and the aspect of cost. And then my last question will be, you are identifying yourself as a Pan-African digital kind of outfit, isn't it? How will it play within the other jurisdictions that you operate in? And at the same time, how do you want to be defined within the same Kenyan market? You've spoken a lot about the SMEs, whereby the Century Microfinance has been playing a lot, and also within the agricultural space. So when you speak about SMEs, MSMEs, youth, women-led, which particular sectors are you looking at? Thank you.
All right, so when it comes to access to handsets or gadgets, I would say, I think in 2022, we've come a long way from when you look at least maybe 10 years ago, where the cost of the gadget was actually quite prohibitive. Right now, we have very, very affordable handsets that are available in the market. Are we going to get into that space where we enable users to buy, or the way you can do buy now, pay later type of a situation, if I can call it that? I may not answer that. It's not necessarily part of the product lines that we're looking at, because we've seen the customers that we deal with and we've been signing up already had access to the devices. So it's something to ponder on and say, can we get into that with a strategic partner maybe in the future? But I would say the cost actually has improved, and maybe that makes it a better space to play in 2023 if you look at it.
I think we can take two more questions.
Check. I'm Herald Allo from People Daily. My question goes to you, Rose. There have been a concern that fintech companies are a threat to the traditional banks. So what do you make of that? Are you a threat to the other institutions, the financial, the traditional banks? Thank you.
I guess people will always overestimate or underestimate what they don't fully understand. So if they perceive it as a threat, maybe it's because of what they may not know in terms of how we do our business. But like it was mentioned, the pie is very big. We have so many customers to serve. We have not even completed the financial inclusion space. So I wouldn't look at it as a threat. I would look at it as, we're here to do what we do best, and we're willing to work within the industry with other partners available. So if someone may perceive it as a threat, I think that's their prerogative, if I can put it that way. But we're willing to really, really work together with other industry players in the space.
Okay, one more at the other end, then the chair.
Morning, my name is Bella from Bloomberg News. I just wanted to ask about your plans to become a neobank. But before I go there, where I come from, when the potential suitor is able to book the bride with a calf, terms and conditions apply, the deal is already sealed. But I wanted to know more information about your plans to become a neobank. How are you planning to do that? Are you looking at more mergers and acquisitions? And in which markets, if you're able to say? How many markets, if you're able to say? If you're able to also talk about how much capital you're planning to deploy in that aspect? And are you able to also talk about whether you're interested in South Africa? Thank you.
Thanks, and maybe keep the mic, because you asked a lot of questions, so you can remind me of all of them. But yeah, it takes decades to build a bank. We're under no illusions of that. So we are steadily and gradually seeking a similar process across sub-Saharan Africa in particular. Our friends and colleagues from Nigeria are here today, and we'll be doing the same thing in Nigeria as well. We've been offering a range of financial products under different licenses throughout sub-Saharan Africa, and we'll continue to expand that approach over the next years, in particular in places like Tanzania, Uganda, Nigeria, and Ghana. Not so certain about South Africa at this moment, but that's a good question. Maybe you can help us with that. And what else? So how do we work as a neobank? We've developed this technique, which is working across Africa, of acquiring customers through very small loans. And that's a very popular product in the market, and we feel like we can do it really fast, and we can serve people who might have been excluded otherwise, because we don't depend on the CRB, we don't depend on their credit score. We use machine learning neural networks to reach people who might be totally off the grid. And we know, something like half of Africans don't have a bank account yet. And so we're passionate about making a small dent in that market through this approach of lending to them and then advertising and encouraging them to use other products like payments and savings, bill pay, and sending money to your friends, etc. Does that answer your question?
Yes, thank you.
Good, thanks.
Especially on South Africa.
South Africa, never been there. I want to learn a lot about it. And we have a long way to go. I'll just say that.
Would you have a timeline for your plans to become a Pan-African neobank? You've been in business for 10 years. When do you see yourselves achieving that target, if you're able to say?
Short answer is no timeline. It's gradual and it's going to take a while. We're already doing it in Nigeria, the biggest market. And as of today, we're operating as a bank here. And so that's a great step. And you can never predict how long these processes take. It's a regulatory question. And I'm not one to bet on regulators because sometimes they work really fast and sometimes it might take 3 years to do a simple process. So different regulators are different.
Thank you.
Thank you.
All right, thank you very much. I think Matt there, you're being offered a second hand in marriage, South Africa, so maybe...
Oh gosh.
As things settle
I'll
down.
tell my wife.
All right, I think we have one more question. Yeah, go ahead. You have a microphone? Yeah, let's have one more. Do you have any more questions that we could just line up the next part of the program? There is one there. Anybody else so that we can wrap this up? Okay, that will be our last question for the morning. All right, go ahead.
Susan Nyawira from Capital FM. So I wanted to know, the acquisition was 80%, so I wanted to know what will happen to the remaining shares. Thank you. The question is to Peterson.
Okay, thank you very much, Nyawira. Like Matt mentioned, it is really a merger. So what we are doing, we are combining the entities, and depending on the balance sheet size, that is how we arrived at the 2080. So it basically tells you that the existing shareholders will still keep 20% of the business. So that is what basically it means. They are still, the existing shareholders will continue being shareholders of the combined entity.
Okay. And by the way, just before you ask your question, you'll still be able to get a hold of them after we finish the program in case you have some burning question that might just come up after we finish the Q&A.
Thank you and congratulations for the merger. My name is Fred Dongo. I work for SME Today magazine. I wanted to find out from Century. I really want to know whether it will be necessary to operate branches if you'll be offering the services online. Will it be really necessary and viable? Please help me understand why you still need to have branches. Then, since you still deal with a lot of SMEs, are you going to empower them to embrace digital? There are some who are still not very conversant with digital. How are you going to help them to onboard fully? Then I also wanted to hear from Branch. There has been a lot of talk about default in online payment. What is your experience and how are you coping? Because maybe it's not an issue for you, default in payment. Thank you very much.
Thank you, Mr. Dongo. Let me answer the first part to Century. Yes, for sure, we are going to really support SMEs. Like I mentioned during my speech, we had several criteria of assessing who we want to partner with, because we knew there is a big gap in the empowerment of SMEs, and therefore when Branch stepped in and we saw that their vision and our visions were complementing each other, especially on that level of SMEs. We are very happy. So we will definitely be going out to empower SMEs to see how we can support their businesses, because we believe that SMEs are our future, and that is where a lot of employment is going to come from. I think Rose had answered the first part about branches. Yes, currently we have 3 branches, and we are likely to be opening more in a hurry because, like Rose said, we can serve our customers digitally, and so as long as we can reach them digitally, then there is no need for a branch. We don't have to go for one. But should there be compelling reasons why we should have a branch at a certain place, we will consider it and evaluate the merits and demerits of that, and then make the right decision at the right time. So I'll read the other question for Matoro.
Sorry, would you repeat the question? Defaults. Let's see. Our experience in the last 2 years, so before COVID, the default rate was very stable. COVID created a temporary spike in the default rate, not just in Kenya, but all over the world, actually. So we saw similar phenomena in India, Nigeria, Tanzania, etc. And so we decided to pull back and then go through this process with Century and steadily build back our customer base as we feel more confident in the stability of the economy, after the pandemic, essentially. Hope that answers your question.
All right. Thank you very much. As I said, and again, please give them a round of applause. Thank you very much for being patient, and also to you for asking these very important questions. There is nothing as rich as having a Q&A that actually brings out more details that, of course, our friends from the Fourth Estate would like to get to prepare the stories for the day. So this moment, I'd like us to crystallize this very special occasion, and I'll kindly ask us we can be upstanding kindly, so that we can move the seats and just have a symbolic moment as we celebrate this union. I will act as the priest. I hope you have your vows together. And the witnesses, there are so many. There are so many.
Prefer to use a different metaphor, like the Olympics. Like we just won a gold medal or something.
Even that too, that flies. That flies. All right. All right, so the moment we've all been waiting for as we crystallize this very special occasion. Here we go. Please, can we give a big round of applause to Branch and Century Microfinance Bank forging forward together. And this, let's do that. This indeed is a milestone that we'll be celebrating this great occasion. And as you heard for yourself, there's still more to come. A lot of knots are still to be tied to put everything together. But right now, consider this the official Branch International Century Microfinance Bank merger ceremony. Well done. And ladies and gentlemen, that concludes our program. I will ask our guests you can have your seats, members of the Fourth Estate. We have the chairman, Peterson Mwangi. Please, let's not leave the stage yet. We like a photo moment. Peterson, please, let's have Matt back on.